Okay, I didn't take this trade, but let's say you want to take a short like GTLS, and it looks really nice and bearish. It broke this downsloping trend line. It's got nice relative volume. It's through an SMA. Like this is a pretty nice short setup. And let's say you're halfway through the day and it's just kind of hanging out like right around there. But you're like, holy crap, this thing has fallen a lot. And I don't want to put a stop way up here because then I don't have a lot of room to move. But it's so damn bearish, I do want to trade it. I do want to take this thing short. Are there any other ways that I can structure this trade in a way that A, I don't have to hold it overnight because I don't want to hold things overnight. There's a CPI report tomorrow morning. Or B, I can actually get some good risk reward out of this thing because technically all the boxes are checked off. So where do I put my targets? Where do I put my mental stop? Where do I put my profit target? How do I structure this thing? Well, a lot of times you'll see charts, especially shorts, that are kind of in the middle of nowhere and people are too afraid to take them. They're actually so weak and so bearish that there's a lot of profit you can take from them, but there's like a psychological block that can keep you from wanting to take it because you're afraid it's going to wick back up because there's nothing around it, right? It's so far extended. Well, one thing you can do is you can look at volume versus volume. So if you look at this D1 candle, that's a lot of volume. Now, you won't know that while it's happening because the candle hasn't finished forming. So it might be like halfway through the day and you're hanging out down in there. So what you can do is you can look at the general relative volume of the candle and you go, okay, this is going to be, if this keeps up, it's going to be more volume than most of the candles. Like if I've got, like let's say over here, these levels were kind of ranging between 3 and 4 times relative volume. And if you look at this by the end of the day, it was 3 and 4 times relative volume around there by the end of the day. So you can kind of use the 12-period real relative volume moving average to determine kind of generally where this thing's going to be and what its probability of breaking stuff is. Next, you got to find the levels, the horizontal levels on this thing. So let's imagine we're just reading this chart to see what's up. If we zoom out, there's a gap down through here, and then we're hanging out down in this zone, but then we break back above that gap and look at the volume on that gap. That's a considerable move. That's a key move here in this story of this chart. This isn't like just nonsense noise. Look at the volume there. So this gap down means something important. So as soon as we break back above it, we notice that new line that we broke turns back into support up top through there. Whereas before it might have been a little bit of resistance popping up underneath through here. So what we can do right away is we can line up the top of this high relative volume gap candle right there. And look at that. You have that line of support right across through there. Okay. Next, you can look at the pivot lows that this thing is trying to break through when it's right up top here. So obviously this little wick candle, even though it's not a lot of relative volume, it's a pretty significant structure on the chart. Like it's a nice little wick down and back up. So if we take a line and put it right through there, then we have our first 2 lines. Now you see this little doji right here, which is also even bigger volume than that gap break right through there. So let's put a line through there. And then we have a whole bunch of you see these little pokes above these lines here? Now our probability of our candle being higher volume than these candles is probably really high, but it doesn't mean that these candles aren't going to do anything. They might stop the trade. They might be a good place to take profit targets. It depends on what the market's doing, right? So we take a look at this candle. We're going to put a line right through here at the open and at the close of this candle. I like to do the opens and closes. And then we can also take a look at maybe like this one right through here. There's like a little doji in there. And look at that. The doji stopped right at the close of that other candle. You're starting to see some clues. Now, this stuff isn't like reading the bones. It's not magic. You can't predict stuff with it. But it oftentimes, and I don't know why, it might be institutional buying patterns, it might be levels that are secret or like hidden kind of levels, or it might just be other retail traders reacting to the scrap too. It doesn't matter. And then you have this line right through here, this bullish candle right through here. We've already got the bottom of it measured out, so we'll put that right through there. All right, now let's take a look at this thing intraday. That's a shitload of lines. You don't really need to know that many of them because the majority of them are going to be lower volume lines from lower volume D1 candles, but they're still above average significant lines. If you look at this first area right through here, we broke down below and now we're bouncing off of that same line of support right through there. And then this top line is that D1 candle. So that's the compression. And then as we break down below there, let's say this is where we want to go short. this is a nice place for a stop. You can either do the stop like VWAP, or you can do above the compression. And then as you go even further, you can see at every single one of these smaller lines, boop, 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 there's a little bit of a reaction. Bouncing off that one right through there, now breaking down to the next one. Usually what happens is these lines kind of stop the momentum of the trade, and everybody kind of waits to see like, okay, what's going to happen? Are we going to take profits? Are we going to bounce? What's going on? And then you can look at the volume of the reaction. So look, we hit this line through here. Oh no, are we going to bounce? Well, that's a pretty low ass volume candle right there. And then we have the next two candles, these red candles, significantly higher volume. So maybe you can add on that one. Boom. Now we know we're going down to the next level. So our next profit target is right through here. And we get to this one, dip underneath it. Uh-oh, here's the engulf, but the engulf is terrible volume once again. So we don't believe that. And then we just kind of warble around through here. Uh-oh, this one might be a worryable place right through there. So you might be thinking about moving your profit take a little bit higher up right through there. We get the rejection. Okay, cool. We're safe, 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 safe. We're still going. And then we're reaching this level and we still haven't bounced off the top of it. I mean, buyers had a chance here. Buyers had a chance here. We're probably going down. So we get to the next high volume pop and look at that. We broke below that next level. And now you know you got a room to here. So hell, you can add on that candle and then maybe take profits right down in through there. Or you can hold the whole type of day. But basically, this is how I do it. You set up these horizontal lines based on where the volume is on the chart. And then you can actually see how the chart reacts to each one of these levels, which will increase or decrease the probability. As it approaches one of these levels, this is a considerable profit target. But then once it starts to react, like once the buying volume is piss poor, there's no real reaction to it, whatever, all of a sudden something you're worried about gets you excited because you're like, damn, this thing should have bounced here. It should have stopped here, but it didn't. The reaction is terrible. Okay, it's going to go to the next thing. And it will often just kind of flush out to the next level and then wait, and then flush out to the next level and then wait. And this is just a giant candle in the middle of nowhere. So what this does mentally for me is it helps me like break up this giant candle where I'm afraid the whole thing's going to wick against me into a bunch of step levels where I can go, okay, DEFCON 1, DEFCON 2, DEFCON 3. I have segmented levels where I have options at each stage to decide what I want to do. And it turns a freaky giant overextended candle into something that's a little bit more reasonable and tradable.